Let's take a look at the markets like we do every week with the help of our global macro research firm MacroOps. So first off, precious metals need to be on your radar. Gold's monthly chart is setting up for its next leg higher. So if you look right here, there is a pretty nice consolidation going on the monthly chart of gold. It's teeing up for another major run, but that's not going to happen until we see some weakness in the market. We need to see that broader sell-off in equities trigger before we're going to see gold pop. But when it does pop, this is a nice run that it's going to go on. The percentage of gold miners trading above their 200-day moving average fell below 10% a few weeks ago. So readings like this tend to mark selling exhaustion, which creates the conditions for longer term bottoms. So with so few above their 200-day moving average, you could tell people have just thrown gold away, which is a good signal when you want to go long, because you want the sentiment to be bearish, because we know when sentiment is bearish, that's actually bullish for a market. Net small speculator positioning in gold is also around levels that tend to coincide with longer term bottoms. So you can see these are the speculators right here, this graph. It's gone negative. So this is a good sign, especially when gold remains in a technical uptrend. And a technical uptrend, we mean very long term if you're looking at it. Yes, it is in an uptrend. Our commercial short-term oscillator recently swung below its red line, which is a bullish condition, while seasonality remains highly supportive over the next few months. So again, more bullish factors for gold. So definitely keep that on your watch list. And if gold is popping, the other precious metals will likely pop too. So keep an eye on the whole space. Our leading yield indicator and 10-year yields diverged quite a bit over the last few months. So here's our MacroOps yield indicator, and here's the 10-year. And normally the 10-year will follow where this red line goes. So yields have been starting to catch down over the last 2 weeks, and there's good reason to think that this will continue. And a lot of you who use our systems knows that one of them, the alpha rotation, actually went half into bonds recently, meaning that the macro gauges are seeing something coming. And as you'll see in a second, when we're talking about equities, when we get that sell-off, bonds are going to be a great place to be, along with gold. So a lot of safe assets. They're going to pop hard. So in the MacroOps book, we are currently looking at hedging by getting into bonds and of course gold, with the understanding that we're still in a buy climax, which again we'll talk about in a second here. So sentiment remains overly bearish on bonds, meaning there's probably a good bit of off-sided positioning to fuel a move lower in yields. So I forgot this reminder, but what happens when yields go down? Bond prices go up, right? So if a bunch of people are bearish on bonds, they're on the wrong side of this trade. So for them to correct, what's that going to do? It's going to push bond prices higher. So that's how sentiment works, right? When people are bearish, that's actually good if you're a bull, because it's more people to convert and join your side and buy things up. Same thing here. If you look at the short interest on the bond ETF TLT, it's pretty high. So a lot of people that will have to cover when yields fall and bond prices go up. Moving on to equities, the S&P 500 is in a buy climax, and our trend fragility indicator is in the 99th percentile of its 3-year range. So very fragile. But the thing about buy climaxes is that they tend to last a lot longer than most people think. So you can't just say, oh, it's a buy climax, let me start getting super bearish, because in reality, this thing can last for months longer. So the S&P has now put in 5 consecutive weekly bull bars, which is very strong. This is only the 30th time in history that it's seen this type of momentum. And strong momentum like this positively skews the follow-on 10-week returns. Meaning, if we've seen this strong action, we're likely to continue seeing it, if you look at the stats for every time this has happened. And another interesting thing to note is that consumers have actually turned bearish on the outlook for stocks for the first time since July of last year. And what do we know when people are getting bearish? That's good for the stock market. So Sentiment Trader pointed out last week that some of the most significant monthly rebounds have occurred when consumers had been negative on stocks. So again, negative people, good for prices. So you could see 6 months to 1 year returns were all positive, except in 2001, when the public was bearish on stocks. Or not the public, but consumers, I should say. So the S&P 500's annualized return when there are more bears than bulls is almost double what it is when bulls are in the majority. Again, because bears provide that fuel when they finally convert over. So yes, gold is gearing up for a move higher, and so are bonds. But we are not done with this buy climax in equities just yet, so we're kind of in a transitional period. So in the MacroOps portfolio and in our various systems, we kind of hedge both sides. Still got money in stocks because it can likely shoot up higher from here, but we're starting to build positions in the safe assets as well. Now, if you're looking for some equities that we're interested in, one is Joe, a Florida real estate company. Well, the ticker symbol is JOE. It's the St. Joe company, and right now it's breaking out from an extended range. So this stock has a lot of powerful tailwinds going for it, and we're currently long, and we're going to be adding to the position this week in the MacroOps portfolio. As you can see, it's breaking out of a very long-term consolidation, and it is a pretty chart. Another stock that we're in is called Wheels Up, ticker symbol UP, and it's making a move right now out of its long-term base. You know, we love these long-term bases. So this company is positioning itself to be the Uber of flying private. So it's run by a talented and experienced leadership team that has plenty of skin in the game, which is exactly what you want to see. They're invested in their own success. So there's a lot to like about Up as long as the team keeps executing on their vision. So you can see again here a breakout from a long-term base. This is another one you could add to your watch list. And I wanted to end with a quote from Blair Hull, who is a great money manager. He said, "There are few people who can develop the skills to get the edge, and far fewer still who can withstand the losses emotionally and still stick with the system. Probably only 1 in 500 people have the necessary discipline to be successful." And you guys know how much we talk about sticking to your systems and sticking to your strategy, even when it's difficult. And I've told you already that this year for the systems has been difficult. Do we worry about just 1 year? Of course not, because we are long-term investors. Do we go back and run all the data again just to make sure everything's okay? Of course, and we did do that. And it just reconfirms that we are making all the right moves in the systems for a long-term game, which is exactly what you want to play. But that doesn't mean that it's easy to stick to the system when things are not going how you would like them to go. But hey, that's the hard thing about the stock market that most people can't handle. Like Blair here said, probably only 1 in 500 people could handle it. But that's why when people start using our systems, we hook them up with a psychology masterclass just to get their mind in the right space to actually execute on the edge that they just got. Because it's one thing to get the edge, which is very difficult on itself, but then it's another to execute on that edge, because that's where your emotions come into play. That's where it gets tough. And as always, if you're interested in our system and that psychology masterclass, make sure you check out this free training. We show you exactly how we do everything that we do with our systems, our psychology, and how we manage it all together to have consistently good returns year after year. So if you want to check that out, click the link in this video or down below in the description and comments. Click those and I will see you in that training.